Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we're taking a look at Bitcoin. I'm on the 4-hour. We've got our Coinbase chart, and as you can see, basically the most important thing right now is this ascending trend line that we've been following for a few weeks now, and essentially we've just been putting in a series of lower highs on 4-hour candle closes, slowly creeping up here, which typically is bullish, putting in what's called an ascending triangle. We have a flat support on top, and then we have like basically a continual pattern of higher lows, and eventually what happens is you'll test the top of the range enough times and then you break to the upside and run up to the next resistance. Typically this pattern will break to the upside more often than not. Unfortunately, I don't think that's what's going to happen right now. I think we're very close to breaking through right here, and on multiple occasions this got bought back up with these massive wicks, and I think that was an attempt to essentially save the trend from dumping down here and fulfilling the Adam and Eve pattern. And I think basically distribution is taking place in this range, and I think it's just a matter of time before this breaks. Now, we've been playing this range every time it comes back down here to the upside, because it is bullish when you see these wicks, especially like a series of large wicks like that, and then consolidating back inside the range and never getting an actual candle close below that resistance, or that support line rather. So that's what we're paying attention to. At some point in time, if we get a candle close below this and then we get a confirmation, open and close, whatever, I would expect us to sell back off like we've been expecting. And when we do, I would expect us to come down to our next Fibonacci support zone, which in this case the bearish retracement is going to be down. We made it to the 382 previously. This is our high overall, which is what the retracement is of. So we made it all the way back up to the 886, almost as high as the wick, but we did get a higher candle close, which would technically be like a confirmed breakout. So we essentially confirmed that we got a higher candle close breakout above the previous high, but not the wick, the actual close. And then what happened immediately afterwards? We sold off, bounced back up, and then we sold off. So that's weakness at the top of the trend. But we did find support. We got bought back up, and now we're continuing along this trend line. And you'll notice too that we have this other white trend line here that we were interacting with, broke out to the upside, came back down, interacting with, broke out, found support, broke back up, put in our highest candle close, dumped down straight through it, and then found support on the bottom line. And now here we are getting smashed down by it, and the same thing happened again. We took the long off of this position over here because we were expecting essentially that this range is going to continue to hold until the one time it breaks. So there's no reason to continually think that this range is going to break every time we come down and test it. But eventually it is going to break. And honestly, I think we're closer to the break than we are to like finding support on it again. So I think what's going to happen here, we're going to try to find support on this white line. If we don't find support there, we're going to come back down to this orange 618. And then we're going to bounce around here for a minute, and then we're going to see that weakness come in. We'll come down to the heart line of the channel, which is that green dotted line right here. And that's going to give us that 236 retracement, the 382 in blue. We previously made it, if you're counting this the high of all time of this little trend right here, we made it all the way down basically between the 382 and the 0.5, and then got bought back up massively. So if you're counting this one as the high, we came down here and we made it only to the 236 and we got bought back up. So depending how you look at it, and if you're going by wicks or candle closes, you could say that we're essentially, regardless, we're putting in a higher low, but the target changes depending on how you look at it. If we came down here and you're counting that one as the high here, the 382, so then the next target would be, or the 236 rather in blue, so the next target would be the 382 in blue, which is the heart line, which is this green area right here. Now before that happens, it's possible we find support here, get that move up, and then instead of looking like an Adam and Eve pattern right here, it's going to look like a head and shoulders. And if we do get that head and shoulders comes in, then that's going to be the shoulder, the head, we'll get one more shoulder, and then we get the measure move break, which would be very similar to the Adam and Eve pattern break. So once again, that puts us down here in this green box area, which is coinciding with our strong horizontal support at 10,813. And then after that, the next target after the 382 is going to be our 0.5. And the 0.5 is the exact measure move of the pattern when it breaks, which I would expect your target normally on a retracement is going to be between the 382 and the 618. Between the 382 and the 618. but typically your 0.5, depending on how bullish it is, and if we're going to continue to the upside, is where we would find support at. So now this blue circle right here is going to give us between the 618 and the 0.5, and that's where we're going to take a long for a potential position trade back to the upside. But we're going to take a green for a potential position trade, like short term, to the upside, in case we don't make it all the way down to the 0.5 or the 618. Now in the event that we do just break down through here and traditional markets start selling off, and all of a sudden we get like that massive dump, that's going to change everything, and we have to revisit it, because we could easily get back down here below 10,000, come down as low as like the 91, 96, and that's that long-term blue. That's also our parabolic support line in green right here. The 886 of the move, 786, all comes into line with that. So while it's possible that we get all the way down here, we have to see a violent retracement of the traditional markets, which I don't want to call the top again. I don't want to call the bottom every time, but I think we are very, very close to topping out this trend. Not only based on fundamentals and what's going on currently, but also based on technicals and how this is all looking. And again, we were talking about the daily, the weekly, and the monthly close on CMEs. Let's actually, while we're here, we'll talk about it. But the daily, weekly, and monthly close on CMEs and GBDC all put in a lower high on the macro trend. But Bitcoin just so happens to, on the weekly and the monthly now, have confirmed on spot markets a higher high of the downtrend, which would tell people normally that we broke out. But that's a divergence between markets, because essentially the markets represent the same thing. One is closed on the weekend, one is not. So over the weekend, a small portion of the market, those that are still trading, obviously like retail, those people basically have pushed up the price and confirmed that high. And vice versa happened on traditional markets. While the traditional markets were closed, we got that higher high. But as soon as they open back up, they have the option essentially to do the exact same thing the following week or whatever after that confirmation, and they failed to do so on multiple occasions over and over again. So it's been multiple weeks now, and month, and even daily, and they haven't gotten the close. So that to me is a divergence between markets. That means that basically the markets are not in line with each other. Spot market is not agreeing with what the futures markets are doing, and the CMEs and the GBTC and everything. And basically what that tells me is a portion of the market feels one way and a portion of the market feels another way. And until they agree on that, we're not going to get convergence between those two. And that's what we need to see, is confluence and convergence. We want to see basically the markets telling us the same thing, coming together and telling us the same thing. But that's not the case right now. So we need to be very skeptical in this area, because typically that's what's going to happen when you're getting faked out. So now let's look at our indicators on the 4 hour now. And this is very important. We put in this massive high here, put in a lower high, put in a lower high, put in a lower high, and I would expect us to come up here and put in a lower high. And every time, what are we getting rejected by? Once we made it down below here, we try to get back above and save the blue. We fail, we get the massive sell-off. Come back up. Failed to consolidate, get the massive sell-off. Come back up. Failed to consolidate. We flipped it back over here, which is normally bullish. You would think we're going to get a potential trend back to the upside, a long trending trade, but it just didn't look good. It looked extremely bearish. We got all these red histograms in a row and then sold straight down through it. And then we finally put in lower low on the histogram. And now we're coming back up, and the most likely thing to happen is we're going to continue finding resistance on this until finally the one time we don't. So we found resistance, found resistance, found resistance. So more than likely we're going to find resistance again. Now in the event that we can close above it and we can get continuation to the upside, we start seeing like multiple multiple histograms green. That's going to signal to us that we're going to get potential continuation to the upside. But we just have to assume the same way this trend line is going to keep holding, we assume it's going to continue holding until the one time it doesn't, because it's going to hold every time we touch it, and then eventually it will break one time. And it's the same exact thing with the indicator. We're failing to get back above it and hold, failing to get back above it and hold, failing to get back above it and hold. So what I would expect is that we fail to get back above it and hold. And that's exactly what it looks like is happening right now. Now what we need to see is we get this big bullish candle right here, and what does that look like? It looks like we're getting ready to roll over right here. We're slowly just fading down, and then we find that support, and then all of a sudden we get that little breakout. And essentially, that looks to me like a stop hunt. You have all these people basically saying, oh, it's rolling over, it's rolling over. I'm going to short this thing. And then they're late to the party, and then they get stopped out. And on like altcoins like Ethereum, looked extremely bullish and actually putting in like higher highs clearly. But Ethereum doesn't lead the market. Ethereum is what people jump into, when they start getting bullish and they want to make higher gains. but the actual chart itself isn't reliable because essentially all it does is just trail after Bitcoin. And that's the same case with all these altcoins, with the exception of a few, like, some of the DeFi coins, like, in different space, like Chainlink, for instance, is like extremely bullish right now, putting in all-time highs and everything. So what happens? It continues to put in all-time highs because everybody starts piling into it. Because while everything else is like indecision and we're not getting higher highs, and they're putting in like potentially like lower highs over like a macro trend, Chainlink is extremely bullish and it's blue sky breakout, continuation to the upside. So what we need to be careful of is that people get extremely bullish on those altcoins. And in all reality, those charts don't matter at all. What matters is Bitcoin's chart because it leads the market. So if it continues to the upside, it's going to lead the market to the upside. If it continues to the downside, it's going to lead the market to the downside. So what we need to do is be very careful. We want to pay attention to these two trend lines and see what happens. Now, as far as the Jewel Thief, let's go take a look here. We basically got the buy signal. And, basically every time you get the buy signal, it's not immediately going to signal you, move to the upside. You kind of get that retest, and then we get the burst out. Same thing here. You get the buy signal, kind of get the retest, see the knife stab down here in red, and then boom, we get the bust up. But it's not giving us a long trending trade. It's basically just giving us a short continuation, pop up. And same thing here. We get the short continuation pop up, a little pop up right here. You know what I mean? So we had 1, 2, 3, 4 times in a row that if you didn't set your stop loss too tight, that you got a nice little move out of that, a nice little burst, but no continuation. So we need to be very careful. Now also, what we're going to do is switch over to a longer time. Oh, I'm sorry. I wanted to do the, I'll take a look at the moving averages real quick. So we basically crossed it over to the downside here. Looking at our 8 period, the red, and the 21 period yellow. We essentially like crossed down here, finally got the cross, like I was saying, finally got the negative cross and sold off. And we get the massive dump down to the 89. And we get the dump down to the 89. We put in these amazing wicks right here and move right back up. It's very clear that we're not going to continue selling off. And then once again, we do it again. Now, what this shows me is it should show strength in the market. But why is it selling off so violently and then getting bought back up? That looks to me like institutional money or somebody with a large position protecting it. Because the market is trying to say, we're done, we're going down. And then somebody else is saying, no, I don't think so. No, I don't think so. And then finally people are like, all right, fine, we're not going down. They start going up, and then it rolls back over. And same thing again, gets bought straight back up, tries to sell off again, and then boom, we finally get the continuation. But no continuation, consolidation, continuation, which is what we'd expect to see. So if we can get that right here, if we can consolidate on top of like the 50 SMA, and the moving averages, we've already crossed it back over on a short time frame. We took the position down here off the 89 for a quick move to the upside, and it was a nice profitable trade. And we're going to continue to take that same move until we don't. So if we come back down here to the 89 again, we're going to take that wick again off the 89 and get a continuation and just hope it keeps putting in lower or higher lows. But more than likely what's going to happen is the parabolic SAR is going to accelerate to the upside, and then eventually if we're going to retrace, we're going to come down here to the 200 EMA. So that's what I would expect, and you'll see that that's going to come in line once again exactly where the heart line of the channel is and exactly where our green area is. So we want to pay very close attention to that, and that's going to be our target to the downside. And then you'll see on the 4 hour with our traditional indicators, we have basically like 2 out of 3 indicators giving us a bearish divergence. So here we used a little bit of energy to get up high, and then here we used more energy. There's more green, and we got a lower high. So essentially it took more strength, more buying, more pressure, and then we got less high. So what that's saying is we're exhausting our ammunition and we're getting less out of it. Our rocket is trying to take off here and it gets up high and then it fails. And then our rocket tries to take off here again and we burn even more gas and we burn even more fuel and we pump and pump and pump and then it fails again. So what that says is that this trend is weakening. So we put in this lower high. Now we're putting in another lower high right here. Now it is possible we consolidate and continue to the upside. But again, that's not how this looks to me right now. And then you'll see also that's on the MACD basically from, let me zoom in, from here to here. It's very clearly this is bigger, this is higher, this is more of a histogram than this is. And here we have this high price action all the way up here at 12,000. And now here our price action is substantially lower here at 11,800. So again, that's a divergence. And now here we are at the RSI, and you'll notice the exact same thing. This one comes up here, we get high, and then we come back up, and we put in a lower high on the RSI. Oh, I'm sorry, that's going to be our convergence, rather, because this is lining up with the price action on with the price action and the indicator are lining up together. So we put in this high over here, and we have a high that corresponds in price action, and then we put in a lower high here, and we have a lower high on price action. And now here on the stochastics, finally at the bottom, we're going to do the same thing. And you'll see we come way up here on the stochastics, but we use less energy to get to a higher price. And then here we sell back off, and then we come all the way back up, and we use a ton of energy to get back up. We get even higher. We use more energy here. We got more energy. The oscillator is higher up. The indicator is telling us more energy has been expended. We're higher up in the range. We're more than likely going to top out here soon. And where did it get us to? We got this high over here with less energy, and then we used more energy, and we got a substantially lower high. So 2 out of our 3 traditional indicators are telling us basically that we have a divergence, a bearish divergence, and we should expect the trend is, basically getting exhausted and potentially selling out. Now, what do we have right here? A double bottom. And in continuation, the measured move of the pattern to the upside. So then what did we have right here? It's the exact same thing again. If you look at however you want to draw your resistance line right here, I'm just going to do this really quick just to give you an idea what I'm talking about. Essentially double bottom and then breakout, and the measured move is going to be, from the bottom of the pattern to your neckline break. And then once you get your actual breakout, you'll take the measured move up, and we get the measured move here to the yellow, and then we come back down and we break down below it, and once again we got a double bottom. And what's the measured move going to be on the double bottom? There we go. It would take us all the way back up to the diagonal trend line, take us back up to the resistance. So at this point in time, is it unlikely for us to think that this could hold one more time and we could get another pop up here to the upside on the daily chart or on the 4-hour chart? Yeah, it's possible. It's definitely possible. So when we come down right here and we find support and then we get that move back up, what's that going to do? It's going to get people super bullish again. We come up here, we put in another high, take care of that divergence, exhaust the oscillator indicators, and then we could potentially get that sell-off. Now, could it just roll over right here and that was it? And we, yeah, of course it is. And is it possible that we measured the measured move differently and we go from just the bodies and not the candle closes? And then where's that going to put us at? Did we get the measured move already? Yeah, it's very possible that we already got that measured move. So we need to be very careful with this. When you're getting a bunch of things that are potentially, telling you one thing and they don't all line up, that's when you have to be the most careful in the market. Because what we're looking for is just a bunch of things telling us the same thing so that we have the most confidence in the trade. And now here's our daily. And you'll notice, we basically got this strong trending move up here. We're in the blue. We're getting that strong move. But we put in 1, 2, 3 red histogram wicks, and then we try to stave it. And now we put in 1, 2, 3, 4, 5, 6, 7, 8. That's 8 days of negative histograms. So what is that, consolidation? Or is that exhaustion? Depends how you look at it. And now here you have price action here, and that's a high. And then we sell back off and come back up. And then we have price action higher than this point right here on the daily close. And now once again, we have a divergence on the indicator. This is selling off. It's going down, but price action is going up. That's not how it's supposed to happen. They're supposed to coincide. They're supposed to line up. And it's the exact same thing right here as well. We basically got the Stoch cross here, the buy, way ahead of time, gives us that continuation move. We get a nice move to the upside, and then we get our sell right here. And at the sell, we get a pump. And that's a divergence. We should be getting a sell. We should be dumping, and then somebody saves the price, pushes it back above the 8. Then we come down here. We sell down this time to the 21. We make it all the way down to the 21 the second time we attempt. Then we bounce back up. We save the 8. So what does it look like is going to happen? We hit the 8, sold off, hit the 21, and now we're going to sell back off, and we're going to hit this 50. And the 50-day is going to line up, potentially when we sell off with the 382. And the 382 for a close or even a wick down there is going to be our potential next target if you're counting this as the high. But if you're counting this as the high, we already came down below the 382, so you would expect the 0.5 to be our target. So again, we're just not sure exactly what we need to look at right now. And that's okay. You take enough trades when you do have confluence and you do have enough things lining up, and those are going to be your best trades. And then you can take a risky trade here and there, or one when you get a feeling, or you have a couple things lining up but not everything. It allows you to basically be a little more risky. But if you're just waiting and you're not taking like the trades, or you're taking bad trades, or you're getting bad entries, you're less likely to take that trade and then get the real good one to happen because you're not taking as many trades. I would rather take 20 trades and break even on 19 of them and then get the one massive move, than take 20 trades and be profitable on 15 of them, but still make less money than if we just got one good one. And so really what it comes down to is, when you're looking for these trades, you're basically looking for that one massive move, that one massive win. And all you're trying to do in the meantime is just mitigate your risk so you don't take that massive risk. And then everything else in between is just gravy. You're getting little moves up, little moves down. You're making a little here, a little there, breaking even, getting into trades, getting into positions, and then you're waiting for the big move to happen. And it looks to me like we're getting ready to top out. And I know people don't want to hear it, and nobody likes to call the top and this, that, and the other. Well, I've seen these markets and I've looked at these markets enough to know when it looks like, it's getting exhausted. And I know everybody's super bullish on the stock market and they're printing all this money and this, that, and the other. Well, be careful, okay? Because right when everybody gets to absolute bullish, just like they did last year when the stock market crashed and everybody thought I was crazy and they were calling me stupid and telling me I didn't know what I was talking about. And sure enough, then all of a sudden, everything goes from perfect to, the coronavirus, and then it's dumping. And we're selling off to, massive lows and 50% drops. So be very careful in these areas. And now let's look at what's going on with this bad boy. So we're crossing to the upside. We get that move. That's an awesome continuation move. We get the knife, comes all the way up here, shows exhaustion. We get that knife stab. We're in the bearish, distribution zone. We're basically like saying like people are selling off right now. Potentially could get continuation, but we're in the area where we're essentially getting exhausted. We get the cross down here, the blue cross, okay? Crosses below, and then we attempt to cross it back over. We re-enter the bearish accumulation zone or distribution zone, and then what happens? We find resistance. The blue finds resistance on the purple and fails to get the cross right here. If that would have crossed over, we would have got the blue buy and continuation to the upside. But instead, it gets rejected and comes down. So now you have the purple is coming down. That's our longer time frame. You have the blue is coming down. That's our shorter time frame. You have the knife is coming down. So all three of these are casually drifting down on the daily, and yet what is happening? Price is casually drifting to the upside, and once again that's a divergence. So we need to be very careful again with that, because essentially when the sell-off does happen, it's going to be very, very violent. And that's our daily. And now finally let's switch over to the weekly rather, I'm sorry. And you'll notice here on spot markets, we did take out that high on the weekly. So we have our high, we have our low, we have our lower high, we have our higher low. And now what are we at now? If this sells off right now and comes back down, we already have a higher high on spot markets. It's higher than this one. That's good. And now if we come down here and we can, basically make it to the 200 exponential or 200 simple, we're going to put in a higher low, and that's going to look bullish over time. And I think that may be like the actual, move that we can take like a positional trade off of for like a long-term trending trade to the upside. And again, if we make it down here as far as the 89, it's way down here at 8,100, but that's oftentimes going to be our target, is either the 50 right here at 87.64 or the 89 right here at 8,077, and that's going to line up with the parabolic SAR. And what happens when we get to the parabolic SAR? We come down there, we touch it, we flip it, and we dump. So if we come down here, we touch this, we're going to flip it, and then we're going to dump to the 200, and that is going to be our long-term trending trade to the upside. Now what I do like to see here on the weekly is we were able to get back above the red line, the red slope line. And if we spend enough time up here and we get high enough up, we're going to violently flip this back over, and we're going to get the blue continuation. Now the best place to take the blue is from below the heart line, below the mid zone, okay? And that's when you're going to get your long trending trades. And then when you start seeing these histograms and you get not one but two histograms in a row, that's telling you the trend is getting exhausted. You almost always get some kind of bounce, attempt to come up, put in a lower high, and then we'll sell off. So now what's happening here? We got above it. We're starting to turn this back over. We're starting to roll it back over to the upside and potentially going to turn it blue again. But what is happening? Okay, we're getting the green right now. But if this begins to top back off, it's going to start looking exactly like what previously happened right here. So we need to be very careful with that. But it is possible that we're going to get that continuation. And again, we're looking at the weekly. So we could consolidate for months right here. We could sell back off, put in that higher low, consolidate, and then finally get that move to the upside. And it's going to confirm what we saw on the weekly, but it just takes a long time to play out sometimes. And then here we are, once again, have the distribution zone, knife stabs all the way up to the top, telling us that we're expecting the next knife stab to top out, and that's the end of the trend. So let's look how that looks on the chart. So we basically get the knife stab up here. That's the break, consolidation, and then when we come up again, this is where the knife starts getting exhausted, and then after that, we're getting tired, but it's continuing, and then we finally get the hard sell. It attempts one more time to get up here and take out the parabolic SAR, and then that's it. consolidation, sell off. We take it out, everybody gets extremely bullish, and then everything happens to the markets. It crashes down here, and this actually preceded the stock market. It happened beforehand. And then finally, we get that bounce back up here. It gets marched back up here. This is like basically like full-on marching action. We get this indecision right here, a big wick on either side, and then we get a massive rejection, and it looks extremely bearish. 2 massive wicks, and then boom, we get the burst to the upside, consolidate inside the moving averages, and then we finally get on top of them and flip them back over. So at this point in time, it looks bullish. It looks like bullish continuation. But again, I've seen it all before. So we get the blue above here, we get the sell. We get the buy, we come down here, we find support barely. We were about to get the cross right here, and we found support barely. Now, if we continue to move up right now, we're going to flip this back over red, and we're going to enter back into the bearish distribution zone. And again, if we start seeing, more than one histogram red to the downside start selling off, I would expect us to come down. And when we come down, what we want to see is we want to see the histogram come down, and we want to see it find support on this. And when it does, when we do get that move finally, then we can expect the continuation, and then we can flip that back over blue, and then we can get our long trending trade. But right now, we don't have that. We don't have that. This is going to be the best. On a weekly time frame, this is going to be your best indicator. We flip this back over to blue, and then what happens? Everybody else sees it. All right? Everybody else sees it right afterwards. And then boom, get right back up, push right back up to resistance, consolidate, continuation to the upside. Massive move. 2 reds in a row, sell off, you're done. Sell back below it. All right? So when we flip this back over blue, that's going to be our long trending trade. A long weekly trending trade. And the weekly trending trade, when that flips over, that's going to last 4 months, and that's going to signal to us a bull run. Now, is it possible that we get the same situation like this, a bull run where we put in another lower high? Yeah, of course. But we're going to pay attention to that because we're very close. We're above it right now. We sell all the way back off, consolidate above it, and then get continuation and flip that bad boy back over blue, and that's our massive bull run. And there's no reason why that can't happen sometime in the very near future, especially as all these currencies are getting devalued. But again, that's fundamentals. That's not technicals. And now here we found support on the blue, on the purple, and the blue is continuing to the upside. And as soon as we get above this blue line right here, we're going to re-enter into the bearish distribution zone. And the most reliable signal is once you're in the bearish distribution zone, and then you get the hard sell as you exit it. In the same way that when you come down here and we're in the bullish, accumulation zone, we get the little flash of it, but we get a move back above it, and then we get the little flash, and then we get the hard buy. And again, your most reliable indicator is when you get the accumulation and then the hard buy, or the distribution and then the hard sell. So what could happen right here? We're going to come back up. We're going to get back in the distribution zone. We're going to turn this back red, and then eventually we're going to get that hard sell. And that's when everybody's going to get wrecked. And we have to be very careful because all we have to do now is just not get wrecked and hold out for that good move. We get in that continuation long trade to the upside, and that's it. We can relax. We don't have to overtrade anymore. We don't have to scalp. We can just sit back, make money, wait for the pullbacks, and take profits. So we're going to be very careful in these areas. We know that this trend is potentially topping out. We know traditional markets are potentially topping out, and that's okay. There's nothing wrong with that. But as long as we know it and we're looking out for it and we're being careful. Now let's look at Ethereum really quick. Everybody's talking about how bullish Ethereum is. This is our daily chart on Ethereum. Where does Ethereum look like it's at right now? It looks like it's basically right above at this resistance right here. Resistance, sell off. Resistance, sell off. And now what is that? It's an ascending triangle. Lower low, or higher low, I'm sorry, same high. And then finally, boom, burst, and we get the move to the upside based on the actual consolidation pattern. Flagpole, move to the upside, measure move. Come back down. Where did this get up to? 1,300. Where is Ethereum now? 400. So we are still 300%. We need to get a move of 300% on Ethereum just to challenge the previous all-time high. Meanwhile, almost every market right now is making all-time highs. Traditional market, all-time highs. Gold, all-time highs. Even the index funds, which are loaded up with absolute junk, are making all-time highs right now. And yet somehow, Bitcoin and Ethereum and all these top market cap coins are not making all-time high. And if that doesn't scare you, I don't know what does. But here we are. We're basically at the top of the range. This is where I would expect us to top out and sell off. This was our support flip. It's a support resistance flip. It's resistance, it's resistance, it's resistance. Boom, we bust above it. It comes back, it's support right here, and then continuation. And then we come down to it, and it's support again. Back, go back up here. Lower high, come back down, support, fail, and dump. Come back up, and now we got a high, and then a low, and then a lower high, and then a lower low. And now here we got another lower high, and then we put in a higher low, and that starts looking bullish. And then we come up in here and we put in another lower high, and then we dump back down to a lower low than this previous one. But now this looks like the macro, and that is essentially our low, and then that's our higher low. So the whole time we thought this is our higher low, but then we sell back off, but we still put in a higher low, and that's okay, that's bullish. And now here we're putting in, the way you can look at this is, this was our low, that's a high, and then we came down here and we put in essentially a higher low, and then we came up here and we put in a higher high. So on the micro, that looks like we're actually in an uptrend right now. But in all reality, if you zoom out, we're very clearly in a downtrend still. And all this is essentially a bullish, a bullish retracement of a bearish trend. So essentially, we're just selling off for so long, it finally breaks to the upside. But it breaks to the upside and puts in another lower high. So we have to be very careful right here. Very careful right here, because this is exactly where you get trapped in positions. At the very top of the range and then a violent sell-off. So, but we are in the accumulation, we are our distribution zone. We did get the hard sell, but we didn't exit the distribution zone. And that's why, this didn't look bullish, or this didn't look bearish to me. Price action on Ethereum, it would sell off and then it would immediately get bought back up, even more bullish than Bitcoin. And then Bitcoin is over here putting in another lower high, and then Ethereum's breaking out to the upside and putting in a higher high. So again, Ethereum is leading to the upside over Bitcoin, but the second Bitcoin decides it's done, Ethereum's going right where it goes, right back down. And if Bitcoin decides it's going to the upside, Ethereum's going to the upside even more violently. And that's what's great about altcoins, but it's also terrible about altcoins is they can do whatever they want. And then the second daddy Bitcoin says, bro, we're going up, you're going up too. And if he says we're going down too. So now here we are. Same spot, back in the bearish distribution zone. We're attempting to cross this back to the upside. If we can cross the blue above, we're going to get that buy. But if we don't, we're going to get a rejection right here, and we're in the bearish distribution zone, and we're going to get the hard sell just like this. And then that is going to give us that continuation move that we actually expect, because we would be exiting the bearish distribution zone. Here, we get the hard sell, but we don't exit the bearish distribution zone. And that is what makes the reliable signal. Here we get the hard sell and we exit the bearish distribution zone. Here we get the hard sell, but we don't ever make it to the distribution zone. Here we get the hard sell, but we don't ever make it to the distribution zone. Here we get the distribution zone, we get the hard sell, but we do not exit. So the number one thing that we're looking for is all those things to line up. We're looking for the bearish distribution zone, we're looking for the hard sell, and then we're looking to exit the distribution zone. So that's what we're going to pay attention to. And again, this is on the daily, so it's a not long enough time frame that this doesn't just have to play out today. It could play out anytime from on average, I like to multiply the time frame that I'm looking at by between 4 and 12. And that's my average trade for that time frame. So theoretically, if you're on a daily and you're looking for a swing trade or something like that, or a decent little positional trade for something, short term, you're expecting that trade on a daily to last between 4 and 12 days on average, just roughly. That's what I usually look at. And then on the event that, we do get that position, then you're going to look for the opposite. That's in the direction of the trend. So if we start selling off, you're going to look for it on the shorter end. So you're looking for a 4-day, bearish, basically like a bearish retracement followed by continuation. But in this case, we're potentially chopping out the whole trend, and we need to be very careful. So well, there we have it, guys. Going into some serious in-depth, TA. And like I said, we're expecting this range to hold right up until it doesn't. It's only going to break one time, but when it does, it's going to be violent. And I'm just in a position right now where I just realistically think that we have too much potential risk to the downside in traditional markets, in hard assets, in everything. And there's too much just indecision, and there's too much just uncertainty with the economy and with the CV and all this stuff going on right now. The only reason people are getting bullish is because the price action has been going up. And That's not always the best thing to look at, because that's creating the divergence between reality and the actual charts. So if you have essentially, the economy, and then you have Wall Street and the stock markets, essentially the economy is really what's going on. And then the stock markets are, speculation as to what's going to happen in the future. So if the real economy is still terrible and we're not producing anything and, we're not recovering and things are getting worse still, they're not getting better. They're getting worse, but they're getting less worse. They're getting worse, but at a slower speed. So that's technically good, because we're starting to roll over the downtrend and then potentially going to put in like a bottom and then start moving to the upside. But that does not mean we're there yet. So we need to be very careful, because now we have a divergence. We have had a divergence for quite some time between reality and speculation, between, the actual economy, the world economy, and also the price of goods. And what that tells you is speculation and everything. When you see these assets like gold and stuff like that making all-time highs to the currency, it does not mean that gold all of a sudden is worth more. It means it's worth more money. And the reason gold is worth more money is because we're devaluing currency. And the reason that we're devaluing currency is to try to stimulate the economy and get money moving. But the problem is the velocity of money is so slow right now, it's almost stopped. People are afraid to spend that money. They're literally putting it away and only using it on what they have to. And a lot of those people are not using it to do things they should be doing, like, paying rent, paying down bills, paying credit cards. And that is absolutely horrible for velocity of money. So we have to be very careful now. I think we have basically global economic collapse coming. We have so many things telling us that we need to be careful right now, and that the risk is way too high to the downside. Fundamentally, yes, it looks like, when you print a bunch of money, that we should get moves to the upside. But when the trade gets too crowded and everybody gets on the one side of that trade, what always happens? It goes in the opposite direction. And why does it do that? Because the market is always going to go against the average person, or against the majority, because that's how the market makes money. The market is always going to counter trend trade the majority. And that's what we need to pay attention to, because that's what this is all about. It's all about trending trades. And right now, the trend looks like it may be exhausted. That doesn't mean we're not going to make it back up here. Doesn't mean we're not going to put in a new high. Doesn't mean we're not going to get continuation. But what it does mean to me is, it means we're closer to the top than we are to the bottom. And that is the worst place to be. I would much rather be closer to the bottom than the top. I would much rather have a 50% chance at a coin flip than have a 25% chance at a coin flip going in my favor. And right now, I don't think it's a 25% chance. I think it's a very small chance that we're going to continue to the upside, compared to the likelihood that we're going to get a retracement or a violent dump to the downside. So there you have it. We're going to leave it there for today. And I want you to pay very, very close attention to the TJD TDMACD, because that right now is the number one thing that I'm paying attention to. We have divergences on multiple time frames. We have markets not lining up with each other. We have, the economy not lining up with the speculation. We have so many things and so many, inconsistencies that we need to be very careful. So is it possible we come up here and we put in the shoulder and then the head and then another shoulder and then we sell off and get the measure move? Yep. And it's going to be the same measure move. The difference is it's just going to break from slightly higher, because we're in an ascending support trend line. So, well, there you have it, guys. Crypto Trend Trader. Appreciate everybody. The group has been excellent. I'm really enjoying the interactions with everybody. I'm very happy for everybody that's in the group. Everybody is extremely unique and from all over the world. And it's been an absolute pleasure getting to know everyone. And I am very excited for what is to come. We've already had quite a few awesome days and trades, and things are heating up. So I'm very excited to see where this goes. I wasn't expecting so many people from around the world, honestly. So we're on all different kinds of time frames, and I thought it was going to be a little crazier, but because everybody's kind of spaced out, we are in a lot of we do have like a lot of different times when people are on and different available. So I may actually open it up to like one or two more people, preferably that would be on like the United States time zone. So they're kind of like opposite of the majority of the group, so that we have like a little more consistency as to when people are around, because I'm finding that often, like during the day and during key trending times and key market times and trades, important times when you're trading, when you have volatility, that there's not there's not even many people around. I thought it was going to be a little more hectic than it was, and just getting everything set up and everything. So I may open it up to 1 or 2 more people. If someone in specific is interested, please go to the Crypto Trend Trader page and contact me on the email. And I prefer somebody that's been around for a while, on the channel and has been commenting and been active. So if you are interested in that, please leave a comment for the video. And also, guys, for those of you that are in the group, if you feel comfortable with it, I'd absolutely love for you to put a comment and just kind of let people know, have you been overall having a good time? Are you learning things? And, is it helping with your profitability of trades? So there you have it, guys. Crypto Trend Trader. And thank you guys for all the support, everybody that has been donating lately to the channel. We are getting ready to put in some serious upgrades. I am super excited to start doing live streams and interacting with the community. And I'm very grateful for those that have decided to join the group, taking the next step, not only in their own journey and learning and becoming better at technical analysis, but more importantly, benefiting the entire community by essentially supporting the channel. So, and for everybody that silently supports the channel and never says that they were the one who made a donation, I do greatly appreciate that. And I also, appreciate your discretion, that not everybody wants, credit where credit's due. And also there have been a few people that have contributed to the channel in other ways over time, like with the intro and some of the other things. And I am greatly appreciative of you as well, because, you have different skill set than I do. And that's what this community is all about. It's about building up together and being able to work together and use our different skill sets to all benefit each other so that we can grow as a community and grow over time. And I am very excited. We are 1 year in, and I'm very excited to see where we're going to be 1 year from now, because I have a feeling it is going to be exponentially greater than what it is now. So there we have it, guys. Crypto Trend Trader. Love you guys. I'm out of here.